Let's do it, man. Let's go.
All right, so I want to welcome Matt Ouellette to the Halifax Network podcast. I know we've been talking about getting together for a little while, and we're finally here to make it happen. So welcome.
Thank you. Yeah, we've been talking about it for a bit, but happy to finally be here, and big fan of the show, and
I appreciate that. Yeah. So I know you kind of wanted to get into a few topics, some investing, some real estate, some likeness. So, why don't we just kind of jump right into it? Why don't you give the viewers a little dive in your background, who Matt Ouellette is, how did he come to be, and how did you end up in this seat?
For sure. So, I guess how it all started off is we met through BRC and
the Bedford Run Club.
I think right off the bat we kind of kick it off. We were very similar. Where we're in the midst of starting our careers and very passionate about what we do.
Absolutely.
And so we kind of jived and then I thought, well, there's even though we're in completely different industries, there's a lot of similarities, and I kind of just wanted to get on the show and get your take on some stuff on real estate, but also kind of see what I can give to the viewers about the stock market. On some things some myths, some things that are true, some things that are not true. And I guess a little bit more about me is, originally from Grand Falls, New Brunswick, so a small town boy like yourself.
Yeah, small town living, baby.
Yeah. So I did my undergrad at Université de Moncton, and then the master's in financial economics at Western, which led for me to start my career in finance in Vancouver, of all places.
Wow.
In the private bank for BMO. Which led to Toronto on the trading floor, and then on the institutional side at BMO Global Asset Management. And then eventually 2020, COVID, I think, was a time where, people are kind of realizing, what do I want to do? Or it was a good time of reflection, right? Because we were kind of...
Yeah, you kind of didn't have anything else to do but reflect a little bit. We were kind of stuck in our boxes.
Yeah, so then I just decided, there was an opportunity for me to come out east, closer to home, closer to Moncton. Still do what I did in Toronto, manage, money, but now I don't manage money for institutions or pension funds. I manage money for high net worth people, for the Chris Crowells of
Yeah, absolutely. Yeah.
That's kind of how I got to, in this seat today. And that's how we got here.
Nice. So what would have been some of the driving factors that would have brought you into the finance world? Were there anything specific that kind of led you down that journey? Or
what got me to this role is helping people and it being very fulfilling, as opposed to when I was in Toronto, I'm just staring at a Bloomberg terminal for, 12, 13 hours a day. The numbers didn't really mean anything, as opposed to in this role, you're literally sitting across the client saying, here's all my money, don't mess this up,
right.
Which is a huge responsibility that I don't take lightly. Because I don't care if it was earned. Sounds corny, man, but I'm a corny guy.
That's all right.
I think you're finding that out. I don't care if it was earned hour per hour, or if you're a farmer, potato for potato, or if you're a fisherman,
right.
or a realtor, house per house. It's taken a lifetime to earn. And when somebody entrusts you with that, it's it is serious, right? So you can't be throwing spaghetti at the wall,
hoping it sticks,
and Bitcoin and stuff like that.
Yeah.
No, it's serious stuff, and that's there's a few myths that people in general, more in small towns, think of the markets, and hopefully I can kind of shine some light on that. So that's kind of I came in for the money, but it's now I'm doing it because it's kind of like a family doctor, a good advisor. You're gonna be with them, and until one of us goes, which is hopefully long down the road.
Yeah, no kidding.
You're making a difference. You're dealing with multiple generations. It's after family, money is the most personal thing there is, right? Another reason I guess I'll add to that there is probably a better answer is just it's always changing, right? It's always, you can never rest on your laurels. Is that the right way? Yeah.
Yeah, I believe so.
Yeah, I'm French, so it's all my fault. But
Yeah. I'm not as French as you, but I'm definitely a little French.
I like
Yeah,
it.
yeah.
I like it. So no, it again, finance. Like there's so much noise. There's so much news. Buy, sell, this, that.
This stock, this company.
This company, and there's a funny saying. I'd always like to find a one-handed economist, because oftentimes an economist is like, well, on one hand you have this, and on the other you have that. Well, which one is it, right?
Right.
So with finance, you always have to learn. And I'm not going to tell you I'm the smartest guy, but I am a ferocious learner, and I'd always want to kind of progress. And you have to be in this space, right? If you're not going forwards, you're going backwards, right?
Absolutely.
And one last example here. Tell me if I mumble on here, or if I talk.
No, yeah, it's all you, man.
Think about like negative interest rates. In pretty much all the textbooks, like 5 years ago, that was impossible. In all finance 101. Now it's like a common thing, right? So there, you always kind of have to. With Bitcoin too, that's a whole different thing. How it's all going on. So there's always things that are changing, which makes it very interesting for somebody that wants to learn. Also keeps me on my toes.
Yeah. Well, I mean, that's kind of part of the job. You always got to be learning and bettering yourself and getting more information in your market or your industry to really kind of handle, what's coming up front. So. I know you wanted to talk a little bit about, some of the intricacies between investing and real estate, but I was just curious, like, where do you find, like, people struggle with the most, like, in terms of, like, investing their money, or, some of the hurdles that you kind of come across, maybe prospecting new clients? Like, is there a lot of hesitancy? Because I know, to relate it back to real estate, I mean, at the end of the day, a lot of people look at us like sales guys. So sometimes, I wouldn't say that, I think generally most people are good, but maybe somebody's had a bad experience with somebody really too salesy and pushy and maybe a little sleazy, and it really doesn't feel so genuine. And some people kind of run with that. It's kind of like painting us all with the same brush, that's going to be the experience. And it's really not about them. It's more about the salesperson. So like, have you come across any of that? Like, how would you kind of deal with those hesitancies and reassure them that they're kind of making the right move?
For sure. No, that's, again, great questions, and you're 100% right. I'd say the first thing I'd say is one of the issues I find people, generally the younger generation, that they have trouble in investing, not just in investing, but just getting in the markets. Like it's not like it used to be, where 20, 30 years ago you could pay for your year's university with a summer job. Now, you need these, the price of university has gone up, or studies. Now you need all these degrees, masters, to get a job, of where 20, 30 years ago you just needed a, high school diploma, right? So, I guess it's hard for the I'd say people our age, but when it comes to investing, I'd say one of the things that's hard is they want results now, right? They want it now, right? And we're
yesterday
almost,
yeah.
And we're such in a society of like, why would I go to the store? I can Amazon, next day shipping.
Right. Everything's right now.
Right here, right now. I remember, back in our day, not that we're that old,
Well, we can say it, man. Like, we ain't getting any younger, right? Like,
back in our day, you had to tune in to watch an episode, right?
Right.
And you better, be there the next time at this right time if you want to see the second episode. If not, like, you're done. You'd have to hope and pray it eventually goes in the reruns, right?
Right. Because now you can record everything, or you can like download it or YouTube it.
Binge it.
Right, binge it.
There was no binging back in...
No, you had to wait week to week.
Week to week.
Man, I even remember landline phones. Like,
you remember
rotary dial.
You remember dial-up?
Yeah. Dee, 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 dee. Like you mentioned that to some 20-year-old now, they'd be like, "What are you talking about?"
We're dating ourselves here. If I probably lost 100 followers on Instagram just by saying mentioning dial-up.
They don't know what they don't know, right? CDs,
Walkman. But those were the days. But that's what I find people are having a trouble with, and they'll get into the markets. They'll do more research buying like a microwave or like a toaster than they would of a stock, and then it goes down, and at the first, as soon as it goes down, they're like, this is garbage. This doesn't work, right? And that's not, I guess that's the common problem that people have been dealing, but I'd say more so now is, Warren Buffett, has, $120 billion, and very simple, pragmatic man that I look up to. And a lot of people ask him, how do you become this rich, Warren? And they don't realize that like 90% of his wealth was made after age 60, right?
Wow.
And he says, yeah, it's easy. Nobody wants to get rich slow. Everybody wants to get rich fast, right?
I know plenty of those people, man. I had a couple of buddies that was all get rich quick, this, that, kind of the other thing. And it was like, kind of never really panned out. I mean, one guy kind of really made it, but, it come with some partnerships with some other people, and, he moved away. So, yeah, I feel like, that delayed, a lot of people aren't really accustomed to that, like, delayed gratification piece, And you listen to, like, guys like Gary Vee or, I'm drawing blanks on some names here, but they're like, man, like, most people aren't making it real big. I mean, there are the select few, the 20-somethings and whatever in the web, and, making apps and, cybersecurity and, different things like that do make it. But, like, I think people are too in a rush now because everything's so, like, in your face right now. So you think you have to get it there, ASAP. Whereas, like, most people are really just getting their stride in their late 30s, early 40s, maybe later. Like you said, Warren Buffett, most of his wealth was built, past 60. So, and like people, I think a lot of people thinking at like 60 years old, I think they're thinking like they're out of time. Whereas like, you're never really out of time.
You're not, it's better late than never, but you're right. There's a lot of, you don't have to look far on social media to see, everybody's doing great. Everybody's so successful. Yeah, but are they,
That's a snapshot in time, man.
It is. It's curated. It's,
It's made to look the best. That's the whole application.
So those are unrealistic, expectations. And also, if you're comparing yourself to somebody else, there's always going to be somebody faster, quicker, smarter, and I think don't get me wrong, like you said, there's some young people that are, is the camera there or there? The phone, right?
Yeah. You can just look at me. It doesn't really. Don't really worry about the camera. That's just, it'll get you. We'll do the clips.
Gotcha. Okay. But what I was trying to say was, the young people that are making it is like the, putting out content, delivering value. My buddy once said, and it was so brilliant, and it kind of stuck with me. And I don't think he even kind of gave it too much thought. But we were talking about Elon Musk, right? How do I become like Elon Musk, man? Successful, so productive, and all this. And he just says, yeah, it's simple, man. Just do two things. And I'm like, what's that? He's like, waste less time and do harder things.
Man, there's no better equation.
So a lot of us like will waste time. We say I don't have time. Yeah, well, you know what they say about the pandemic, right? If you didn't come out of the pandemic a better person, don't say you didn't have time. You just weren't disciplined. You had a lot of time.
I had plenty of time. Yeah, man. It kind of just to jump in there, kind of reminds me of starting out my real estate career. I met my buddy Don Rainey at my jiu-jitsu gym, and he was the guy driving like the nice Jag F-Pace SUV with the front license plate was like realtor, and I was like, man, I'm gonna have to talk to this guy before I jump in. Like, he seems to know what's going on. And anyway, we built a great relationship. We're friends. Super good guy, supportive. Even being at a different brokerage than me, he's always there to help out. And like one of the things he really emphasized, for me, because, I'm the kind of guy too, I want to run before I can walk. Like I'm guilty of that, want it now, want it now. He'd be like, listen, he'd be like, well, what can I do better, Don? He's like, well, not really doing enough marketing. And I was like, you're right. I got to do more. He's like, yeah, like a lot more. He's like, yeah, do a post on Instagram, Facebook, all the platforms, if you can. And like, sometimes, he'd check my page and be like, hey man, like, don't see any new posts. Like, what's going on? I was like, well, didn't really have time. And he's like, yeah, what are you doing right now? I was like, oh, me and the wife are watching Netflix. He's like, well, could have made a post. And I was like, fuck, excuse my French, but I was like, he's right. Then I sat there and it's like, I'm the one concerned about where I want to get going to. And I'm the one that's not doing the work to get there. So if I don't do it and I'm just scrolling, watching everybody else's work, well, it's a no big surprise that other people are ahead of me if I'm not willing to put the discipline down to do the marketing, to make the calls, to do the activities that are going to drive the business. So it's like, I think a lot of people are kind of stuck in that rut where they're just comparing rather than doing. And it's like, goes back to, like Elon said, and it's like, don't be afraid to get after it and do hard shit. Like it's, I think too many people, it's too easy now.
Yeah, no, absolutely. And, if, again, I think about it from like a financial example is, let's say let's say you stay in one night and you go to work on something and you make $100, and I go out to the bar and I spend $100. The difference is not $100; it's $200, right? Because I'm down, you're
right.
up. But if you compound that over time and replace that dollar with experience or knowledge, that gap essentially becomes bigger and bigger. So what I tell when younger students at Dal or Western or University of Moncton reach out to me, I say, listen, like, you're in your 20s, have a good time, right? You're never going to be 20-year-old again. Have a good time. But also, your undergraduate studies is what you make of it. You guys are all going to come out with the same piece of paper, but the experience, right, is what, and that's all from you. Did you go to those competitions? Did you, ask the questions? Did you go above and beyond? So anyway, yeah, that's kind of how I feel about that. But you're right. Just put in the time, like, again, how I started my my practice was like, pounding the phones, man. I didn't know wealthy people. I had to like cold call.
Yeah.
They called me the cold called cowboy.
Cold call cowboy.
And and like,
fastest gunslinger in the East Coast.
Buddy, a phone in each hand. But it was funny. It was my mentor in Toronto, Bill Zago. He and Richard Lawrence, actually, amazing, successful brokers, advisors in Toronto, and they taught me how to cold call. And there was zero expectation, man. I didn't have to pick up the phone or do anything, right? But they were kind of calling me out of, I was walking around Bay Street telling everybody I was going to be a $1 billion broker. So now it's like, well, if I didn't, at least try, they would have said, yeah, sure, fine, do whatever, but don't tell anybody you're going to be like a $1 billion broker, because you can't even do like the basics. But it was learning that and just getting in front of people, and kind of going back to what you were saying with the sales thing. I used to not want to be labeled a salesperson, but deep down, like, I think this is where there's a similarity where, yeah, we are indeed salespeople, but like we sell ourselves, and we sell.
Took the words right out of my mouth.
We sell, hey, I should be your guy. I'm not your guy, but I should be, and here's why, and this is what I can do for you. So I don't feel sleazy, and nor should you, right? Because if you're that you can help clients by, finding the right property, getting them a right price, Obviously there's bad actors. There was bad actors in realtor. There's definitely been a lot of bad actors in finance, still are, and it's unfortunate, and we do get paint with the same brush. And me, it really is a sore spot because of, again, coming from a small town. There's not a lot of, advisors that want to go out there, right? So then there's more room for these bad actors, and then they get, they burn people. And then when you have somebody like me going there, no.
We've been burnt already. We don't want you.
We don't want you. It's all, and it's like, so then you're kind of like, no. I'm a good person. What I recommend to all my clients is exactly what I recommend to mom and my dad. And then I buy for myself, right? And, 80% of money managers can't say that. 80% of money managers don't even buy their own funds. But anyway, that's a whole other story.
So I was just wondering if I could call on the, what'd you say your nickname was?
The cold called cowboy?
The cold call cowboy. So do you have any like cold call tips for like folks in sales? Like, or is that like something you can divulge? Maybe it's a secret.
Oh man, that's the secret sauce here. Well, we can dive a bit later when I got a few things I'd like to run by you, but it's I guess it's just about kind of to tying it back. Do harder things. Nobody wants to pick up the phone, man. Nobody wants to call.
I'm guilty of it.
Nobody.
I hate it.
I've already been through that, right? And nobody likes to face rejection. Nobody. But if you have a service and you believe in it and you know that it can add value to people, why not put it out there, right? And again, it's just a matter of familiarity. Even doing this podcast, like we were speaking before we started, putting yourself out there. Not everybody wants to do that because it's uncomfortable.
It is.
And it's not always fun. Well, I think you're crushing it here. I'm sweating a storm.
I'll get you a towel.
Yeah. Makeup.
Right.
No.
She's in the background.
So it again, just doing this, getting yourself out there. I think when it comes to sales, it's all about familiarity. It's all about, well, why deal with Chris?
Right.
Why deal with Matt? Who's Matt? Who's Matt? Who's this guy?
Yeah.
But if you're involved in the community, I've been given a lot of time with UNICEF and other great just in terms of giving back and just a way to get my name out there. There is kind of like I'm doing it for the right reasons, but I'm also benefiting just because it's getting my name out there. But networking, to any events you can, just meeting as many people as you can. Then my goal is to be so omnipresent in the community by either giving back, by coming on great podcasts like this, which thank you for including me.
Hey, you're welcome. I'm appreciative that you come.
So much to a point that my goal is whenever I do cold call somebody, I want them to be, oh yeah, I've heard of you before.
Yeah.
Then that makes I shouldn't say pitch, that makes the proposition much more easy.
Yeah,
because,
it's not as cold, eh?
Yeah. So again, it's you got to do the harder things, but they pay off because you want to be known as, every time somebody thinks about selling a house, Chris, my guy.
Yeah.
You know what I mean? What was it? The stat, that 80% of the sales get done by like
20% of the people.
Old
80-20.
The old 80-20, right?
And that's, I think, pretty standard across all industries, all walks of life. Like, very small percent of the people do 80% or most of the business.
So that's my goal. One thing I did want it to run by you, is really the difference between the stock market and real estate. And, I'm not here to sell you on either one or maybe I will.
Maybe so.
But no, because I love both, right? But I think it's just a common misconception, in small towns and everywhere. Specifically, and I'm sure people in Yarmouth think like that, right? They think, I don't want to invest in the stock market, it's not real.
It's too risky.
It's too risky.
Yeah.
It's a piece of paper.
I'm going to lose all my money.
I'm going to lose all my money. And that probably because there's two reasons why that's there. Number one, there have been bad actors in the past, right? Which is not good. Number two, though, maybe it's, well, they as soon as things went south, they pulled the plug, and they're like, well, and then they lost money, right? So I'll give you an example. Every time let's say I talk to a prospect and they tell me, I've never made money in the markets, or like my last 2 brokers lost me a lot of money. Kind of a red flag. And I'm like, why is that? Did he or she recommend speculative stocks that were garbage, that were not in your best interests? Well, yes, then you were ill-advised, and that's the advisor's fault. Or did you have, a moment like 2008 or COVID where the market went down, and then you panicked and you wanted to make it stop, and you sold? Then I'm not blaming so much the advisor. I'm blaming the client just for, well, that's exactly of like buying a house in Florida, and the very next day there's a hurricane, and you're like, I'm selling this. Sell the farm, sell it all. Well, man,
you're going to take a loss.
You're going to take a loss. That might be a slight exaggeration, but when you look at the stock market, you got to look at it as if you would buy the entire company, right? The whole shebang, which is hard for people that, well, I don't have $700 billion, right? But you got to look at it as if you would buy the entire company, just like with buying a piece of real estate, like or your house, right? Probably one of the biggest investments you will make.
For most people, yeah.
For most people, you will look at a bunch of listings. You will, well, I hope you do, get a very knowledgeable realtor that can help you out. That's a shameless plug for you.
Yeah. All me.
But you're gonna go through all this due diligence. You're gonna ponder it. You're gonna talk it over with the wife. You're gonna look at the numbers and again get as much information as you can to make an educated business decision, as you should. You should do the same thing with the stock market. But unfortunately, most people just kind of hear this hot tip and they're like, oh, I'm getting into it. Let's do it. Which is, again, not the right way. But if you're looking at it, would I buy this entire company? Yes, I think it's grown a lot. It's all, it's producing cash flow. It's growing. It's going to grow, and they're growing even more. Honest management, why not, right? There's when you go, I'll give you a good example. So the median house price 50 years ago in the States was $33,500, right? That's a steal. Yeah. Where can I get those, Chris?
You can't even get a Honda Civic for that now.
That was the median house price in the States, not the average, the median, right? Because the average could be with outliers, right? Yeah. The median. Today, that house, or I guess 50 years later, that house was worth, I got the number here, the exact number, worth $431,000, right?
And the median price here in HRM is $500K.
Yeah. There you go. So you bought something for like $33,000. Now it's worth $431,000. When you, again, numbers guy, not my fault. That is a 5.24 annual return, year after year after year.
Over those 50
those 50 years, right? Obviously there's been up and down years, but if you bought it, at 33,000 and you sold at 431, yeah, you made like about 5%. That sounds like a great investment, right? Right. Stock market, let's use that. If you would have put that same amount in the S&P 500, which is the average, the average index in the States, and you would have not had any other conversation, you would have never looked at your portfolio, you'd have $5.1 million.
That's a lot of cash.
That's a lot of.
You can buy a few houses from me.
Yeah. That's again, so that's over a 10% return. So you ask, again, it's the reason I kind of like real estate. Again, I don't like one more or the other. I have both, right?
Yeah.
But think about it. That's twice the return. I didn't have to change any toilets.
No
I didn't have to do
renovations, no
no
tenant crap,
no nothing,
no headaches.
no headaches. I just, you know, reinvested the dividends, right? And so it's really hands off. And then when you mention like tenants and real rental income, well, rental income is taxed as like ordinary income, which is if you're a high earner, like north of 50%, as opposed to, you know, capital gains and dividends, like that's taxed at, you know, call it 20%, right? Much more tax efficient, no headache. So that's, you know, I'll leave it up to you which one was the better investment.
Yeah, well, I mean, I don't think you're going to get quite as much out of, you know, a real estate investment. I mean, we've suffered not suffered, but like we've experienced like the most dramatic appreciation event in history in terms of real estate, especially here in Canada and in immediate HRM. So yeah, it's, why do you feel that people maybe kind of overlook kind of, you know, the investment piece? Like, is it because like, you know, because you spoke about, you know, people got to kind of, you know, you want to look at a stock as if you're going to buy the whole company. And then, you know, people in the real estate sphere, you know, they're doing all this due diligence. So let's just think that the house is the company. Like they're looking like, all right, maybe it's for an investment. It's like, all right, well, operating expenses, you know, what's it netting out gross, or what's the gross income? What's it netting out? You know, is there management, you know, this and that and the other thing? Is it in good shape? You know, we're going to get an inspection, make sure the structural integrity of the said dwelling is in good standing. So we're making a smart, well-educated choice. Now stuff pops up, doesn't matter in finance, in real estate, like things are going to happen out of your control. So, but you got to make the best educated decision you can before you invest your money. So why do you think people kind of approach real estate in that way? And maybe, I guess I'm getting the sentiment that like people don't really kind of look at it as the buying the whole company. Is it because it's an intangible, like they can't touch it, they can't see it, they can't feel it, and it kind of feels more, I don't know, like, I don't want to say the wrong thing, but it's like,
Doesn't feel as real.
Yeah, it's kind of, you know, wishy-washy. It's in the air. It's like, you know.
Well, how did they say it in the Wolf of Wall Street? It's fugazi, it's fugazi.
Yeah. It's
Fugazi, fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist.
yeah, right. I just listened to Matthew McConaughey and Lex Friedman's podcast, and he says it, right? Yeah.
No.
Right?
No, it's so couple things. When you do buy a real estate house, you are looking at it like you're buying the whole
touch
thing.
it. You can go inside of it.
You're looking at it like you're buying the whole thing. So and yes, you know, you physically it's there. But again, it's I think the reason why people approach it so differently is because a house is, you know, how many times is a house valued, you know, every, you know, what, once or twice a year, or I guess property taxes, that's
yeah,
well,
they
that's
get assessed every
assessed. That's what we all know that's not an accurate, that's not market value.
No, there's a difference, people.
Yeah, but
people sometimes get confused with that too.
So market value, it only gets, you know, mark to market once, you know, maybe once or twice a year, if that, right? You know, so you don't really know how much that house is worth. So if you were to price the prices on a graph, it kind of, you know, it's not so volatile as opposed to the stock market. Every second the market's open, right? You know, you constantly see, it's like if you had, you know, a big neon sign on your house with the price, the actual price it's worth, not the price that you think it's worth, not the price that you know, the government thinks it's assessed for, but the price of somebody that would give you cold hard cash today.
True market value.
True market value. You know, that's why the market is, it's much more fluid, but it's much more volatile because you see that price every day, right?
You know exactly what that stock costs.
And then there's a lot of factors that come into play. So there's, again, it's you know, bad news. Oh man, it's market, the price goes down. Yeah, but it's, you know, sometimes it's more emotions than anything, right? They say that the stock market is the only place when things come on sale, people run out of the store, and it's true, right? Look at COVID. If you would have, I don't want to give investment advice, but like if you would have bought the banks at any time when there was a crisis, like look at COVID, you would have doubled your money in like less than 2 months. But again, people are like, no, make it stop, make the pain stop. I can't take this. I can't stomach the loss. Therefore, sell the farm. But that is really the exact opposite of what you're supposed to do. You're supposed to buy when there's blood on the streets. I'll
Heads are rolling.
Yeah, but I'll give you another great story. Another way is, people might relate. So the most successful mutual fund ever, to my knowledge, is Peter Lynch, the Magellan Fund, right? Still going, but during Peter Lynch's tenure, I think, from 72 to like the 90s, it averaged 29%. Wow. That's
huge.
Come on, man.
Nobody's making that return.
Yeah. I got to set expectations with my clients. They're easy.
Right, yeah.
But 29%, like that is amazing. You want to know what? The average retail investor didn't lost money on that fund.
Really?
Yeah. Why? Because it went down. This is garbage. Sell it. Went up. Oh, everybody's talking about it. Let's buy it. Went down. Trash. So again, this is where Warren Buffett comes in of, well, wait, you looked at the fundamentals of this company. How much money it's been generating. How much money, you think it will generate, right? Because that's all what a stock is, right? How much money you're going to get, when are you going to get it, and how sure are you, right? So people that like lost money on speculative stocks, it's because they were priced like, they were going to take over the world, right? Peloton, look at the chart, everybody's going to own a Peloton. Yeah, I don't think so.
Yeah, Dana White threw all his in the garbage.
but it's inflated expectations, right? So when you're buying that hype, you're buying that, well, this company is going to take over the world. No, it's not. Well, then when finally it gets marked to market, when people realize, whoa, it was supposed.
I'm way over indexed in this.
Yeah. Well, no, I'm way over, as in I thought this company, look at pot stocks, right? Pot stocks were going to price like everybody was going to start smoking pot, and then finally, didn't take a master's in finance to realize, no, that's not true, and look at them now. So. Anyway, don't want to hate on pasta. Sorry, guy.
Yeah. Hey.
But it's just the things that, again, I kind of relate it to, people say, well, stock market's risky. Well, especially like business owner. I'm like business owners, which I respect. I'm a business owner myself. So are you. Absolutely. But I tell myself, well, think about this for a second. You have had all of your wealth into one single business like that. To me, I see that as highly risky. You probably had bad years. They say, yeah, I have. Did you sell the farm? No, sir. Okay, because why? Because you knew exactly what you bought. You knew what it was worth. You knew the potential. You held on, and now you're collecting the fruits of your hard work, right? The stock market should be the same thing. The reason why people don't necessarily see it as so tangible is just because, as you said, it's kind of like, let's say you start this real estate, empire, which I know you will. Mm-hmm. You're going to need investors, you're going to need money, and then, more and more. And, to all our millions of viewers, that, right, will get on board. Eventually you would do the same thing. Okay, well, you own a piece of this. You own a piece of this. The stock market is just that. It's just, if you just consider it that you own a part of Tim Hortons. Every time you go in there, might be just a stool or if that, but you are physically a owner of that company, and maybe on one or two shares you're not gonna see. You'll see a couple of cents in dividends every quarter. But imagine if you own, and I have clients that own significant positions in great businesses, which I recommend, and they get a dividend. They get paid every 3 months, and it's substantial, right? The whole part of my job is growing my client's asset to such a point where they can just essentially live off the dividends, right? Not even touch the principal.
Yeah, that's the dream.
That is fully possible. It's completely possible. I'd recommend, the Warren Buffett book, Snowball. It's just a matter of, pushing a snowball down a hill, and how long is your hill? The best time to invest in real estate or in the stock market was 10 years ago.
They say the same thing about,
The second best time?
10 years. Oh, right now.
Right now. Yeah. So, yeah.
Almost caught me there.
No.
I know the answer to this. I swear.
Yeah, no. So that's kind of just a point that I wanted to, really kind of drive home. But enough about the markets. I don't want to bore you, I don't want to, I know you're a great realtor, but now I'm if I don't stop talking about being an advisor, man, I might be getting myself more competition,
Right,
jump ship.
Right, hey. No, I'm pretty comfortable where I'm at, but no, I mean, the show is definitely very much about, my guests and what they're doing and the way they can help people kind of become financially free and make good choices. And, I find, like, it's just weird, like, the hesitancy around, like, stocks. I know, like you said, from, like, guys back home, a lot of people, they'll invest millions of dollars in a lobster license and a boat and all the equipment. And that's super risky. Like, you don't know if you're going to catch enough lobsters to pay the bills. And, people back home are so risk averse, I find. Like, especially, like, in my upbringing, like, my immediate household, very, very risk averse. Like, don't like paying fees, monthly payments. Like, it was all cash. Cash is king. How much money do we got in the bank account? How many bills do we got to pay? Is there any left? Oh, good enough. That's good. And it all sits in the company, or it sits in the savings account. It really does absolutely nothing except essentially almost erodes its value over time.
So, yeah, you're absolutely right. I again, back home in Grand Falls, either you have these business owners, very successful, and they're just, asset rich, maybe cash poor, but asset rich, right? Because they're just so busy reinvesting.
Right.
And I'll never come up and say, oh, give it to me. No, you know that that's what you're good at. That's what you're comfortable. Keep doing it. Eventually there will be a windfall. Eventually you're not going to want this business anymore. You're either going to pass to the next generation or sell it to a third party, which you want that to be a whole tax efficient way, which again, we help, right? The value of advice. But yeah, you want people to, they're comfortable investing in themselves because it's what they know. But in the markets, if again, and it's a very educational process with my clients of like, I want them to understand what we're buying and why we're buying it. And when they do, they're like, okay, I get it. Market could be closed for 10 years. I wouldn't lose a night's sleep because I know that and I tell people, I don't know what these companies in 3 months, like, could fluctuate, right? I can't tell you what's going to happen, but I can tell you in like 3 years or like 10 years, those companies are going to be worth more, right? Again, and it's you're not going to win them all, but you don't have to win them all. It's not a matter of like being over diversified with like thousands of securities. No, if you narrow it down to 20, 30 securities, but you follow them to a T, right? You make sure they have those three things in common, honest management, don't lie to me. Clean balance sheets, right? I don't know any company that went bankrupt unless it was over levered and did something illegal, right? So it has clean balance sheets and has growing earnings. So that's and going to your thing about owning cash, it's cash is cash is king. It's debatable because I agree that it's always best to pay cash or something like that. Well, unless you with rates that have gone up there, again, I don't want to get too technical, but like when when money was free within a low interest rate environment, right? Well, why not finance that car if it's costing you 1%? Because you can take your money and make way more of it, right?
Make it work elsewhere.
Make it work elsewhere. But you want your money to do something for you. You want to own something, right? You don't want to own, put it under a mattress, because then you're essentially eroding it. You want to own real estate, quality real estate. You want to own farmland. You want to own quality stocks, right? Something that is paying you dividends, that that it's growing. There was 1.3 million Canadians came into Canada.
Crazy.
So that's you want to participate in that growth, right? As opposed to if you're just sitting there and, again, if you're just sitting there with cash. I tell people that, we're all in GICs. Well, and I ask them, why are you all in GICs? It's no risk. Really?
Are you able to kind of go into details, like for those that might not know, like what a GIC is?
So a GIC is you just kind of lock it in. Go to the bank, say, I want to lock this in, and they lock it in. They say they're going to tell you to the cent, or to the percent of how much you're going to earn. And for the longest time, it was barely 1%.
Right.
Now they're kind of more attractive. But you essentially lock it in. You can lock it in for, 6 months, a year, all the way to 10 years. But like, you can't take it out, and it's locked in. And it's kind of bulletproof. But the rate is not that high, and oftentimes it's less than inflation. So I'm trying to tell people, listen,
you're not even keeping up.
Your money might not go down, but essentially you've crystallized a loss. Your GIC is 5%, inflation was 6-7. Yeah, you've locked in a 2% loss. It's kind of good for the markets, because now we kind of know, okay, well, more we have a control on inflation, then rates aren't going to go up, right? If inflation would have kept going, that means the Fed and the Bank of Canada has to keep raising rates,
right?
To kind of tame the economy. Now that inflation is going down, or stabilizing and going down, it's like, okay, rates are not going to go up anymore. They might even come down. So so that's the whole take on inflation. But now you got the that whole conflict going on in the Red Sea there. And now all these shipping companies are going all across Africa, right? Which is driving up costs, driving up inflation. Anyway, so let's just don't want to get too
technical.
Well, not too technical. Yeah, too technical, and with recommendations, because then compliance is
they're gonna get you jammed.
Yeah.
So I know you want to talk a little bit about like some outlooks on real estate, long term and short term. Like, did you have anything specific you wanted to kind of get into there?
Yeah. So again, like I was saying, and I think that's why we get along. We have similar positions, and we're both interested. I'm very interested in real estate. One of the reasons why is because if I want to invest $1 in the markets, I need $1. If I want to invest $5 in real estate, I still just need $1, right? But I get $5 worth, right? Because you get a bank, like BMO, TD, CIBC. I'm not pushing BMO, but you'll get money from the bank, right? So you can control 5 times a $5 asset with $1, which is good, right? That amplifies your returns, also amplifies your loss. So long term, I am very bullish on real estate on the East Coast. I truly, sincerely think that in 10 years from now, or maybe even less, like Halifax will be like a mini Vancouver.
Well, yeah, that's the kind of the way it kind of looks to be pointing, with all the immigration and the population growth, and
So, but I also understand and realize that in our lifetime, rates, except for the last 18 months, but in our lifetime, rates have pretty much just gone down.
Right.
If you look at, early 90s, you look at the chart, it has just gone down. Ask your parents how much they paid on their mortgage, right? 18% and,
Yeah.
22. And rates have just gone down, which puts a fire, gas on the real estate fire, which is so, yeah, real estate has been on an absolute tear, but the background and the backdrop have been phenomenal, right? You have, the cost of debt just going down, 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 being next to nothing. You have the floodgates of immigration that are open. So now you have very little supply, huge demand. And now you kind of, and also with the supply chain issues that COVID, cost inflation, I'm sure you're aware that, you go you go to the grocery store, you notice, right? Your $100 doesn't get you a full basket.
Man, I just went. I told my wife I was gonna make French onion soup. Never made French onion soup.
Nice.
I literally went. I bought a few, like some provolone, some Swiss cheese. She's allergic to dairy. I got her some dairy, some goat cheese. I got some onions. I like Diet Coke, so I got a couple Diet Cokes. A few cans of beans. I'm not poor. I just like beans.
Yeah. No.
But,
Wait. Can we do a little Prices Right?
Yeah, sure.
Okay.
So, I mean, I had like maybe 7 items. Okay, maybe we'll say 9.
Okay.
So, that's like 4 cans of beans, a bag of onions, some beef broth, couple 2 liters of Diet Coke, and the cheese. Cheese is a little expensive, especially more so now. But guess how much that 10 or so items cost?
Are we talking craft cheese or the generic?
No, I kind of went a little bougie. Like I got to cut some nice brand cheese, and it was pre-sliced. I was kind of crunched for time, so I tried to make it as easy as possible.
I'm gonna go with a 125.
$78.
I'm over. I'm out.
Yeah, right.
But still, that's like, think about it. You got 10 items. And
I'll give you the craziest example. Do you ever go to Sobeys and you're maybe you're young, university budget, you're hungry, maybe you want something for a couple of days. You remember those Dagwood sandwiches?
Yeah.
They used to be, the whole slab. It was a big honking sandwich. I remember coming back to the apartment after a long day of being in class, and it was like a friggin' big old sandwich. It used to be like $3.99. I stopped in. I was at an open house in Tantallon. I was like, man, I'm starving. I'm going to go get one of those sandwiches. I love sandwiches. Grew up on sandwiches, fishing, working at the fish plants. I go there. It's not the whole sandwich. It's half the sandwich. And half is being generous. It's like almost the quarter of the size it used to be. $8.99. Yeah. To me, I just did some quick math. I think that over indexes on the amount of inflation that we've been seeing. So I don't know. Anyway, I don't know the ins and outs, and I can't see their overall costing, but it seems like grocers are almost taking advantage of this whole thing, because there's no way it costs you. That's over 150% increase to make that sandwich. Well, you're not paying people anymore. Fuel and the carbon tax and this, but it's where's the rationale there?
So, it's harder for any business owner, right? When you supply chain, sourcing your food, your stuff, God knows that cheese might have came from the States, or maybe you got the real good stuff from France.
Right. Yeah.
So then your labor, right? It's yeah. Anyway, we could talk a lot about how the prices have gone up, which is, again, makes it harder for young professionals to and families, young families, man. I couldn't imagine right now. I like, similar to you, I went to Costco. That gets out of hand real quick.
I call that the $300 store. You're not walking out of there for less than $300.
I made a dent. It was like $400.
Oh yeah.
And then I had to go fill up full of gas. That was another 100. And then
Yeah.
I added a few, miscellaneous things at Superstore, call it another 150. Man, I got like over 600 spent in a day.
Right.
And I'm just me. And I'm like, holy, like this is a lot. You know what I mean? So, yeah, it is. Yeah, the inflation is, don't even get me started. But how do you protect yourself against that? Well, number one, you buy, real estate. That's an inflation hedge. Quality stocks, not speculative stuff, right? That's a hedge. You invest in yourself. A lot of people think about like cutting costs.
You can only cut so much.
Well, people say, why do you have a coffee at Timmy's every day? If you save that $2 coffee, you can.
You're spending it somewhere else.
Yeah, but why? Don't focus on that. Focus on learning a new skill and getting a job at work and doing a better promotion,
Or a
doing
side hustle.
Side hustle. You can either cut costs or you can increase revenue, right?
Yeah.
So that's what I tell people. Like, hey, crush it at work. Whatever you are, be a good one. Care. That's a big one.
Yeah,
I think that's one of the reasons we got along. I'm not going to sit here and say we're the best. Well, maybe we are. But anyway, I'm saying we care, and not a lot of people do, right?
Yeah, a lot of people, and don't want to lose followers, but like a lot of people are looking what's in it for me and not so much like what can I do for others. And I think if you get caught in that mindset, you kind of get stuck. Like, because people eventually will see through that. Yeah, maybe you get the odd good client here and there and everywhere, but next thing, if there's no kind of like reciprocation or they can't see the value that you're providing, I mean, it's really easy to kind of eventually spot, who's in it for you or who's in it for them. And it's funny you mentioned cutting costs only get so far instead of generating revenue. Like, I used to be in consumer goods working for Unilever Canada, and I started in 2012. And I was like, I learned LIFO, FIFO, last in, first out. And I got in the door as a territory rep, and we had a nice little office on Brownlow and Dartmouth. My boss was the office manager. We had an admin or an executive secretary. We had 3 Sobeys key account managers. My buddy Kevin, that was the Loblaws manager, account manager. My boss was also the district guy for Atlantic, and him and another buddy, Ralph Sherratt, were like co-account managers on Co-op when that existed. And they were cutting like, I just got my foot in the door, and like next thing, we got no admin. They moved the Sobeys team positions to Toronto. So it was like cut. And my director, hopefully he doesn't mind me naming him, but my buddy, he's a good buddy of mine too, Mike Guindon. He always used to make fun of Unilever. It's like, God forbid they want to generate more revenue. They're like a Dutch bank. They just want to cut costs. And that was the solution to being more profitable and looking more profitable to their shareholders. And it's like, there was no real like foresight or planning to like, how are we going to sell more? It was like, okay, well, we got to make 2 to 3% growth over last year. Or flat depending on the year. And so what are we going to do to get there, and where can we cut to make it look like we did do a good job? So instead of really like coming up with good ideas and being innovative and driving more revenue, they just wanted to cut. And it just never, ever made any sense to me. And every time they wanted to cut, straight to the Atlantic business, because we were 10% of the population. So then we're 10% of their overall portfolio, and we get less than 10% of their investment. So it was like, oh no, let's not figure out how to drive more revenue in our small territory. Let's just cut the entire sales team, the account managers. We'll move it all to Ontario, Montreal, and then we'll let them manage those businesses from afar. And to be honest, it just never ever gets managed. So they end up losing even more than I think they're saving, And I come from that, because that's where I kind of got caught up in. I got caught in the restructure, maybe a little jaded still, but, it's just like there was really no foresight in like, well, how can we make more money in those areas rather than just take it away?
And that kind of ties back into the, short-term thinking, right? I want the result now. I want it to look good on paper now.
Well, shareholders for next dividend payment, next quarter, next half, end of the year.
It's again, yeah. You want that immediate result, as opposed to if you do the right decisions. You're investing, but it's going to pay off in the long term. Same for, like, let's say, and again, it all sounds corny, but it's the truth. If you go out and let's say you do something that you can get a quick win, might be not unethical, but it's a quick win. Yeah, you might make a little bang in your pocket that day, but then the truth is gonna come out, always does. Then if that hurts your brand, well, now less people are gonna want to do business with you, right? And I think that's where our values align. My philosophy is I take care of my clients, and my clients will take care of me. I make decisions sometimes to my financial detriment, but I sleep well at night knowing that
it was in their best interest.
It was in their best interest, and they know that, and then they're going to tell their friends and family, you should go see this guy. It's a small street in Toronto, Chris. It's an even smaller street in Halifax, and like people talk. It's very small in Yarmouth.
Oh yeah, buddy. Yeah.
So
the wharf talk gets really loud eventually.
So again, those great businesses are the ones who, again, think long term. Again, it's might not look great on paper now, and that's why I tell my clients, like, hey, I'm buying a business, a stock. If tomorrow it's down, not that it happens often, right? Because again, I don't do anything speculative. I don't do anything high risk. If clients want that, go elsewhere. I'm not your guy. I don't do anything low risk. GICs, no, I don't want to do that. If I do, it's to kind of dabble a bit, but it's an educational process to get them where they want it. What I was trying to tell you is sometimes to my detriment, I'll do a decision. But again, if the client knows that it's the right thing, and in the long run, it'll pay off. It'll all work out because they know you have their best interests at heart. They're going to refer you. You will be known as the trusted guy. You will have a client for life. Not just a one win and then, oh yeah, I made a win, but now the next house he sells, he's not going to go see Chris, right? Because you never forget. I think us French guys, we never forget.
Yeah, this elephant never forgets.
Never forgets, right? So, you got to protect that brand, and again, do as a salesperson, do what's Bill Zago, my mentor. Huge shout out to Bill if he's listening. Take care of your clients, and they will take care of you. And I can't stress that enough. It's corny, but it's true.
I think you can apply that to everyday life. Like, just take care of your friends, your family, and don't always look for what's in it for you. I mean, eventually it comes back full circle. That's just how life works. If you put your best foot forward to do the best you can for your people, your community, I think it really kind of pays tenfold, like, at the end of the day. Because, like you say, there's just a lot of people out there that are just always in it for them. And it doesn't take long before that kind of comes out in the wash, and then they start to see who they should be working with or the people that are doing good. And, I think it's just a learning.
One other thing I wanted to add, I don't know how we're doing for time here.
I kind of got plenty, so depending on you.
No, one thing I wanted to drive home was, the value of advice, and like you had said, some people, and in my industry too, right? Why I don't need to pay Matt for advice, but there is true value in that. But, maybe you can, before I kind of tell you what I think, maybe can you tell me on what are some of the hurdles that you've come across? I don't need a realtor. I can sell my house alone, or I can do this, right? Like what?
Yeah, I think, I've come across a couple, like, some unfortunate events, you kind of, you know, you try and do good, and you know, I've had some friends in the past from back in the Yarmouth days reach out, and you know, they're asking me for advice on the, you know, how to price their home, and you know, at first they're, oh yeah, you're our guy, you know, we'll use you, and you know, you come down, you do your listing presentation, your comparative market report, and then, you know, next thing you get a call that, you know, oh yeah, well, thanks so much for coming down, you know, we're gonna do it ourselves. And you know, they kind of take the number you give them and they run with it. I mean, people are gonna do that. You can't stop it. And it's definitely a tough pill to swallow. But I guess, especially like, you know, there's a lot of people that want to go out and buy a house on their own. We don't need a representation on the buying end. And some people don't understand that, like, the big portion for them is, well, when you hire somebody like me, either to sell your house or to buy a home, like, you get me, you get the experience of having done the process. You kind of know the ins and outs of the process. I have a network of people that are good at what they do, whether it's inspectors, stagers, assessors, videographers to get the proper marketing to you know, portray your property the right way. And it's also the biggest portion on the buying or the selling end. Like, you know, I had an instance where I had a friend recently, you know, they bought a new house. They didn't use me. So the wife had a friend that they'd used before I was in real estate. You know, they bought their current house with ex-realtor. Ex-realtor had a listing, called him, and they just, you know, used that realtor to buy his listing. And people often kind of miss, like, the fiduciary care that I provide to my buyers. It protects them because I'm working in their best interest to find them the appropriate home or dwelling for their family or their investment, for their portfolio. And it's my job to ensure that we're doing the appropriate due diligence, that it is, you know, a financially sound move, the infrastructure and everything to do with the home, the integrity in the buildings there. You know, I have a bunch of trusted inspectors that are going to be brutally honest with every issue there is to look at in the home. And we're going to be able to sit down and make the best informed decision on if this is an appropriate house to purchase for their family or their investment portfolio. Very similar to something that you would provide your clients. And then people, you know, think, oh, well, we'll just do it on our own. Well, when you buy from just the listing agent, he's not looking out for you. He's representing the seller. And people often, like, don't understand that. Whereas, like, you might think, you know, he may be a smooth talker and da-da-da-da, but at the end of the day, his fiduciary duty of care is due to his sellers, not you. So you're not going to get the best deal. You're not going to get the best price. You're not going to be able to negotiate as efficiently as me because you have no experience doing it. And you're just overall, you know, you're not getting as much value out of your purchase as you could if you had proper representation out there. And some people are stubborn and they'll never get it and they'll just keep doing what they do. But like, it's like we talked about at breakfast, like, you can lead a horse to water, but be damned if you can force him to take a drink. So all I can do, and that's kind of the whole goal for me with my short content on social media, you know, the long format stuff, like these types of conversations, is to inform people about buying and selling real estate, the do's, the don'ts, the goods, the bads, the why should you use a buyer agent, you know, what are the differences in the duties of care that they provide you versus if you buy directly from the listing agent. You know, what are some of the issues that could arise? You know, what are the benefits of using a realtor? And it's largely in part because they're just more experienced than you in the process. And how could you think that you're going to do a better job than somebody that's been in real estate doing this day in and day out as their sole? That's how they feed. That's how I feed my family. And you think you can kind of just come in here and flumpty dump and get it done better than me? It's like, maybe you get lucky. But at the end of the day, and I have insurance if stuff goes wrong, you're covered. Like, there's, I got trusted lawyers. I got, a whole Rolodex of people to call on. Who are you going to call?
It's you ever hear about the Springfield story? Did I tell you that one?
I don't think so.
It's a good one. So it's this guy runs into the train station, and he goes up to the front desk, and he's like, I need a ticket to Springfield, and I need it now. And the guy's like, well, which one, right? There's a Springfield pretty much in every state, right? Springfield, Indiana, New Jersey, Illinois, California, Florida, and the guy says the cheapest one. And the moral of the story is, you'll get the ticket to Springfield, all right. Just might not be where you want to go. So again, I'm not a realtor. I'm not gonna pretend I know everything you know about that space. That's really your wheelhouse. And with a such a significant purchase, you really want to go into it eyes wide open, because a mistake, if it does happen, could be very costly, right? Devastating, right? Let's say you buy something, wasn't something in the due diligence you didn't know about, and now you're left with this problem.
Maybe it's $50,000, $60,000, $70,000 to fix.
It's happened, right? So I say you got to find that person that you like, you trust, and you know that they know what they're doing, and like their fee. And I'm biased because I'm in the similar situation as yourself, but like their fee, they're worth their weight in gold, right? Pay them. It's not a race to the bottom. Obviously your fee has to be competitive, but you got to compare it to the value you're getting, right? And the same thing for me. Like, some people will get it. Some people will be like, I have to be adding value. If I would constantly year over year not be adding value, man, I'd have no clients. I'd be out of business, right?
Yeah.
But you have to be adding value, whether it's performance, service, just doing what you say you're going to do. Be the advisor you'd like to have. But some people will never quite. Yeah, they're they might not get it, and that's fine. That's fine. And people that basically have, I've seen it before where they sell a business. Now they're with this, big chunk of money, and they don't want to go get an advisor and get on fee based. They'd rather be transactional. I compare that to, buying, like I was telling you, buying the biggest, baddest TV there is, what are they now? 4K.
I don't even dare look at the prices. I bought mine pre-COVID. So.
Nice.
Got a 58-inch. My wife's already pissed it's too big for the living room.
I know where I'm going, Super Bowl.
Right.
So, it's like having this big honking TV, but you don't want to pay the power bill. So, no, I don't want to spend that money. So now what? You're left with this nice TV that you can do. Well, I guess you can game. Well,
yeah.
no.
The best gaming is online now.
Yeah, well, yeah, you're not getting the power. The online is like you get the laptop, or you get a crazy computer, top of the line. But no, I don't want to pay internet. That's ridiculous. You want me to pay how much? 100?
Right. And I think, just to jump in, it just reminded me, like, a couple situations here. Like, a lot of people just don't know what they don't know, and they think, oh, well, I don't want to pay realtor fees to buy my home. But a lot of people don't understand, and not everybody, I know some of you understand. But when you go to buy a house, if you're hiring me as a buyer agent, my services to you are free. It doesn't cost you anything. Anything to have an informed person on your side looking out for your best interest. People don't understand that. Let's say Matt Ouellette wants to sell his house. Well, that's going to cost you between 5 and 6%. That listing fee is typically 50-50 seller to buyer agent. That supplies the seller agent with his fee, and also the competitive remuneration.
Remuneration.
That's a mouthful.
That is a mouthful.
It covers the buyer's fee as well. So there's essentially no cost to you getting professional help to make the biggest purchase probably of your life. It costs nothing. And some people still choose to not even look into it and just do it on their own. And it brings me back to this this one interaction. I totally forgot about it till we sat down for this conversation. It was actually a lead from a buddy of mine, or an acquaintance more so. Probably should give him a call, actually. But yeah, give me a lead. So-and-so wants to buy a place. Okay, set the coffee up. Starbucks right across from his office. Come down. Tell me what he wants. Da-da-da-da-da. And, you know, I've kind of moved away from this approach because, like, if you don't want to work with me, I'm not haggling you for a contract. You know, if you're my guy, I'll trust that you're a guy, your word. I am. But this guy, you know, kind of, you know, depends how the feel you get from somebody. Like, if you think they should be on a contract, buyer contract or whatnot. And I was like, you know, we went through everything. And I was like, okay, well, budget-wise, it's going to be challenging to look for what you want. Because I find a lot of people, or not everybody, but some people coming from different parts of Ontario, like everything's so expensive there, they think they can get something here for almost nothing. But we've appreciated to the point that it still requires like some significant capital to get going. So anyway, I kind of felt like, hey, if you want to work with me, let's like sign a contract. I'll set you up on a collab profile, which I'm sure you're aware of. Like, it sends you listings inside of the parameters and geography that you want. And he's like, why would I sign a contract with you? I didn't sign a contract with an agent when we bought our house in Ontario. And I go, cool, but you just moved here, right? He goes, yeah. And the job that you have today, you work here, right? Yeah. Well, he goes, did you sign an employment contract to tell you what you're going to get paid every other week, bi-weekly, monthly, or whatever the schedule is? He's like, yeah. I go, well, this contract's essentially the same thing for me. It ensures that we are acknowledging that we are in a real estate relationship, that I'm going to work in your best interest to find you the best home, best suited for you and your family. And that's just essentially a short-term buyer contract or employment contract to ensure that we are both on the same page and you understand the implications of what that means. And he was like, nope, not signing a buyer contract.
Really?
And I was like, cool. Good luck with your search. And I just kind of left it at that. Because I'm not going to, if that's the sentiment up front, you're not the guy for me to work for. I don't need your money.
Yeah.
I'm at the point now, like if this is going to be a headache, and I mean, work, they all has their ups and downs and their headaches, but like, I'm looking for meaningful, good connections, good people to help out. If you're not one of those people, yeah, I might take the odd one just if it's, there, but I'm very much kind of trying to focus my time on people that are going to appreciate working with me and not kind of be always like, oh, well, this is wrong or that's wrong or you're wrong, or always push back, having to like prove yourself and why this is the way it is. It's just like, it's exhausting. I mean, it is cold calling, meeting people, getting out there, seeing it, going to events, making content, podcasts. You're exhausted by the end of the day. So to have somebody with that mindset that you're always going to have pushback against, it's just not an interaction or experience I'm looking for. So if you're not on board with how things are supposed to work, then I'm not either.
Yeah.
Yeah,
it does suck the life out of you when again, we're sometimes it happens. I try to stay away, but like, yeah, when you have to justify your fees, I take it sometimes, I take a lot personally.
We all do. You kind of got to get a short memory, I guess I've been told, and let it roll off your back. But
it's like when I'm, there's a lot of background work, in real estate. You're doing all this research, you're doing all of this, a lot of back work, and I give it my all. I don't care when they're a client, when they sign with me, I treat them like, even if it's, a smaller account or like a, $5-10 million account.
My boss always said in consumer goods, you treat the $10,000 account like the $10 million account. Yeah. There's no difference. Sorry, I didn't mean to hijack.
No, yeah. Once they're in, you treat them right, and again, they'll whether it's my parents, I give them as much love and attention. And I really give it my all, and everything that I recommend for them is the same thing I recommend to my mom or I do for myself. So when my fees comes into question, I'm like, man, I really take it personally,
Yeah,
right? I'm
comic
like,
hits you in the right.
I'm like, man, you know, like what I'm doing here and all this. And again, it's not a race to the bottom, right? But you know, you do come to a point of, okay, well, if this is a problem, then maybe we're not a good fit. And I sincerely, from the bottom of my heart, wish you all the best.
Right.
But I can't work for free.
No.
I'll give you one good story here. I'm all about fees. So again, some people get it, some people not, and I put myself in clients' shoes, right? Like, you know, I think about my parents that used to, you know, deal with a family friend, was always on the golf course, was charging them obscene fees for doing absolutely nothing.
Right.
You know, couldn't even get a hold of them, which boils my blood because now you have like, you know, my parents don't have millions of dollars, right? They've worked their entire lives for the money that they've saved, right? Meanwhile, it's being recklessly managed,
Right.
and they can't get a hold of them. You know, that's that. So you don't want to overcharge. You want to charge a fair fee, but there will be a fee. There's no getting away from that. But again, if you're doing everything you can to add value, I had this one client call me. Hopefully BMO doesn't, you know, the whole compliance doesn't. No,
Didn't cut anything out. You know.
yeah, no, it's fine. I got a client call me real quick. Says I want to buy $50,000 of Rivian. You know, Rivian they make electric trucks.
I haven't heard of them actually.
Well,
to
it's
be truthful.
That's probably a good thing. But
Okay, good. Yeah.
So anyway, I want about 50,000 in Rivian. I said, well, you know, my job, I don't want to shoot down all the ideas, right? Like people would be, you know, would not want to deal with me. So I say, okay, well, that's good. Well, you know, tell me, why do you want to buy $50,000 of this company? All right, just why? You know, maybe it slipped my radar. Maybe I should buy some of this for me. Maybe I should recommend it to all my clients. Why do you want to buy this? Well, you know, it's I missed the boat on Tesla. Okay, well, you know, that's not really a reason, but you know, why? You know, what else? He says, well, you know, Jeff Bezos and Ford have billions of dollars in this company. They must know what they make, what they're doing. And I'm like, yeah, you know, yeah, they're smart guys. You know, I'm not going to say I'm smarter than them. But I'm like, let's think about this again. Let's think about this. If we were to buy this entire company today, you know, cost you about $100 billion, you know, not only is there no revenue, there's no profit, but there's no revenue. Why would you not want to buy, you know, this company, cost you $20 billion, but you get $1 billion at the end of the day at the end of the year in your pocket, right? Which company would you buy? And they're like, the second one. Okay, well, why in the world would you buy the stock of the first? IPO'd at $125. Now it's like $12, $13. You know, so
Wow.
yeah, you know.
So did Buddy make you buy it, or did
No.
you buy it?
I talked him off of it, and then he calls, hey, thank you, you saved me. That would have been a 95%, you know, capital like gone, like a 95% loss. And if you're down 90%, you have to like 9x your money.
Yeah, you got to dig yourself out of that
to
big
get
hole.
back to where you were just to break even, right? You know, if you're down 50, then you got to double your money to get back where you were. So, you know, he would have never recouped that loss. You know, it's like, oh, you saved me like $45,000.
Yes, what my job's.
And then I'm like, we're going to have to renegotiate your fees here.
All right.
You didn't like that joke.
No.
I was just kidding,
Oh,
but, you know,
shoot.
I had a good chuckle. I'm like, come on, man. I just paid for my, you know, next 10 years here.
Yeah.
Just buy this one thing. So, again, the value of advice, I say, you know, again, there's you want to do your due diligence in picking the right people. But once you do have that person that's adding value, whether it's myself on the investment side or whether it's Chris on the realtor side, yeah, it's you know, there is a huge cost. People just might not see it there and then. It's not so tangible, right? So they're like, oh, I can't, you know, fathom that, or I can't justify that. And I guess one of the last things I want to tell you there before we wrap up is, you know, again, whether it's investing in the stock market or realtor in the real estate, I think that people that want to kind of stay away from investing, whether they see, you know, real estate or the stock market too risky, the best comparison I ever found to that is like playing Monopoly and not buying any properties and just hoping and praying that you're going to win by collecting $200 every time you pass go. Just every turn collecting. I don't want to buy Boardwalk. That's risky, man.
Yeah.
Forget, railroad? No way. I don't want to buy that railroad company.
Right.
You're never going to win Monopoly, right?
You're never going to win.
Isn't that a good one?
Yeah.
That is good.
My dad always had this saying, maybe too vulgar, but it's like, I find those people are kind of like similar thought process to this. Like, I'd always say something, maybe I'd say something ridiculous to dad, or I have this like outrageous idea that I'm going to do. And dad would always be like, yeah, well, because he'd think it's a stupid idea. He'd be like, yeah, well, why don't you go wish in one hand and shit in the other and see which one fills up faster? And it's just like, I think the people that are wishing, it's like, it's a long shot. Like,
I don't know, man. I don't know if I can use that one, but I think I'm going to stick to the Monopoly one still. But I get it. I like it.
It's just some stuff like dad quotes. It's like, just when you're a stupid kid, it's like, yeah, cool. Well, why don't you try that? Just come back to me after. It's like,
no,
but yeah, man, it's just, it's,
sorry, go ahead.
No, it's just tough. Like some people you're just never going to win over. And it's like, it's just better to move on and focus on the ones that will.
But you've been been following you there since for some time, and like again, I think you're doing all the right things of getting in front of people, trying to like. I hope this was beneficial for I know this is more of a real estate focus.
No, it's like Halifax based, like network. We're all about like people doing their businesses and what they're doing. Cool people and kind of trying to promote that. So it's there's some real estate emphasis, and we did talk a lot about real estate here today. But it's very much about, hey, you need a guy at BMO. Well, Matt Ouellette's your guy. You need an inspector, you need a coach, you need a this. I mean, all of my guests that I have on are because I think they're doing cool stuff. They have the, their mind and their heart in the right place. And it's people that I'd refer with no problem, if somebody was looking for that. So, some people think it's just all real estate, but it's like the Halifax network and the broader sense of community and how can we help each other get to our goals and strive to be the best that we can be.
I told you maybe this is a good way to wrap up, but I told you at the beginning of the podcast how the cold call cowboy would give you
right
would give you a couple tips on how to prospect, and I guess the way nobody wants to be pitched, right? Nobody wants to hear a pitch, but I just it's true what they say that your net worth is your network. And you're one relationship away from changing the rest of your life. It doesn't have to be anything romantic, but I know you're happily married, but I mean, like, let's say you meet somebody, business owner, whatever, connects you with this, opens up a great opportunity. That's happened with me. I've met some, again, some of my mentors there that kind of have shaped the course of my life. They probably don't even know. It was just, hey, I met this, so why not kind of put yourself out there, get on that podcast, go to that networking event, make that call, and the way I position it when I call these people that I know are, business owners that are, qualified, is I just say, let's grab lunch, man. Let's grab lunch. Let's grab breakfast. I'm not asking you to cross the street. I'm not even asking you to be a client. I'm asking you to see if it's a fit, because maybe it isn't, right? I hope a bunch of people reach out to me. Hopefully you can throw email here or something, or my website. I hope, hopefully I'd love to, just see if it's a fit, because sometimes it isn't, right? If somebody says, oh, I've never made a dime in the markets, I'm like, man, look at the mountain chart here, like why did you not make money? Like, was it because you were too emotional, or, you got to find out, right? Or if, I've met with people where they're just, it's just way too speculative stocks. And I'm like, that's not me. If I wouldn't buy it for me,
I'm not buying it for you.
I'm not buying it for you. I don't want to lose my license, right? And I still buy them lunch. Hey, pleasure meeting you. All the best. I appreciate your time. So I say, people be open to getting a second opinion and seeing if it's a fit, if it's a good fit for a second opinion, but most people don't even know how much they pay in fees. Most people don't even know what they own. They own 4 or 5 mutual funds that might have thousands of securities, right? They do not. And, Warren Buffett says, if you don't know what you own everything.
Right.
Own everything. Own an ETF. Own everything, good, bad, the ugly, because you don't know, you're just going with the average. But if you know what you own, you want to own quality, assets, again, real estate or in the stock market. So that's kind of all I've been driving home. And, when the markets are up and on fire, nobody wants a second opinion. My guy's, I don't know what my guy's doing, but he's on it. He's fire. It's when the markets are down, I'll listen. I'll listen to you. And I always, my script, I should say, or my spiel doesn't change. It's not sexy. It's the same thing. So I encourage, if you're not happy with your advisor, give me a call. But yeah, because it's, again, people don't plan to run out of money. People just fail to plan, right? So I think that's, that's my, well, maybe if we bring me back on the podcast here, I'll give you a little more, tools from the Cold Call Cowboys toolkit.
Yeah, absolutely. So, yeah, man. So maybe that's a good place to wrap it up. So if we wanted to get a hold of the Cold Call Cowboy, where would we go to look?
Just, hopefully we can put my website here.
Yeah, we'll throw it on the thumbnail.
And give me a call or, just reach out, if you have any questions. And like I said, that's how I grow my business, right? By offering people a second opinion. And I'm very transparent on, whether I can help you or not. And regardless of if we, do business together, I'll still give you my thoughts and my honest opinions. And, talk is cheap, right?
100%. Well, Matt, thanks so much for coming out. It's been a great conversation. Always love chatting with you, and looking forward to many more.
Yeah, thanks so much. I appreciate it. Right on. Great to be here, and looking forward to coming back.
Awesome. Have a good day.
You too.